Traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we are going to get started with our analysis this morning. So let's start off with the euro, as we always do. But the euro dollar has been in a really tight trading range, and Paul's argument earlier is with gold falling, why hasn't the euro dollar fallen more, or whatever, and I agree with him to a certain extent because the euro dollar hasn't gone anywhere. The flip side to that is, you've seen the pound rally, you've seen the Kiwi rally, you've seen the Aussie rally, you've seen the dollar Canadian pull back, and you haven't seen the euro bounce at all. And that, to me, would be a little concerning if I was long the euro dollar. Now, we know there is, and here, let's get rid of this. So less clutter here from the last couple of days. We know that the euro dollar has major support here at 111.25. That's major, and I can go ahead and write that down because it's been there. We know it's there. That's a 618 retracement, and if you don't know that, then let's just go revisit it. It's a 618 retracement from this spike low following whatever that was. The I always forget, is that the ECB? That was the FOMC. That was the ECB or ECB FOMC. I can't remember. Always screw up those two. But anyway, we have that 618 here. Now what we should probably also do is take the spike low from the very trend low, or the pitchfork low, if you will, to the highs. And what I think is doable at this point is maybe even a move down towards the 50% retracement or this channel low. Now this channel low, remember, it is the pitchfork low, if you will. All right, so that takes us down towards 110.70 and maybe even as low as 110.50. All right, those I think are achievable, especially if you look at this flag pattern that we're obviously doing right now. Here, let's move this out here, and let's go like that, so if we have the flag pattern, it takes us down to 110.70. So I'm going to write down 110.70. Okay. To want to, let's get rid of this asterisk. You guys know that that's important support. I'm going to get rid of the asterisk there just so we have room. All right. Those are prices that are God, this euro pound. Oh my God. I'm just so upset that I'm not short this thing. I'm obviously not going to short it right now, but that's unreal. Unreal. It's like, we can't even get a rally to sell into. That's the sad thing about it. Is like, I was like, okay, and I remember looking at it yesterday. I'm like, if we can get a rally to 76.50, that would be a nice short. We can't even get a rally up towards towards that to sell into. Sad. Anyway, all right, enough about that. So the euro dollar, again, it's still trading heavy regardless. What we've seen, we just have not seen any we haven't just seen any push up in the euro dollar at this point, which would concern me, if I was bullish. Now, any move up towards 111.80 should be viewed as a selling opportunity, same as yesterday. But now what makes it more important, here, let's move that. We're going to remove that, is now we have this trend line that comes into play. So if we get a move up to 111.80, I'm going to look to sell into that strength, okay? 111.80. All right. Okay. And it is bearish. Let's go into the cable. Now the pound, man, this thing is strong. I had a small 1/4 size position. I sold a little bit more here at 90. My cost average is at 146.50 right now. I'm sitting in it. I'm down like 30 some odd pips, and my cost average is 52 actually. So yeah, I'm down like 35 pips. I'm just sitting in it now. It's only a half size position. That's how small it is. But I'm not ignorant or naive to the idea that it can't race up towards this 88% retracement or the 127% extension, especially with the euro pound as weak as it is. And we could head up to 147.20 pretty easily. So I'm going to write that down. 147.20. It is, in my opinion, in a range. Okay, and support is obviously right here at 146. Here, let me remove this really quick. Let's remove that. Let's remove that. Well, let's just draw that. This is obviously key support at 146. If we break through 146, anybody who's bullish or who's been buying the pound, everybody's in the same camp right now that there's no risk of Brexit at this point. And by the way, if there's no risk of Brexit right now, there is a higher risk of the Fed raising rates in June. You understand that, which can work both ways here. If people start getting in their head, oh crap, the UK is not going to leave the EU. Well, if the UK is not going to leave the EU, the Fed's going to start gearing up for a rate hike too. All right, so don't get, just keep that in mind as you're trading the pound. 146. Fed support. Okay, let's go into the Swissy. So the Swissy, this thing has finally started to show some signs of wear and tear up here. I don't know if it's time to actually get bearish, but we are, struggling up here, and I don't have. And let me take the spike high right here. I mean, there's no real reason at this point for it stopping where it stopped, but maybe there is. I'm just trying to figure that out. I want to stay there. Okay. Let's remove that. So there's your 618. It comes in at 99.50. That is critical resistance. Now let's just make the assumption that we fall. I'd like to make the assumption that we fall so we can get an opportunity to get on the long side down here. If I can just let me just remove these really quick. Oh no, I didn't want to do that. That's all right. Oh, I took it from the wrong. Dang it. So the 618 from there, but not from there. Shoot. Crude's rolling over, by the way. See, relative strength is getting neutralized here, which is good because if you're bullish, this is the kind of look you want to see if you're bullish, because RSI has been coming down, price hasn't been. So that means once we get down to 50, which is not too far away in relative strength, we could end up just stalling down here and then bouncing again. I'm going to write down 99.50. It's not great resistance. It is resistance, not great. What I'd be hoping for is some sort of pullback here. Let's get rid of that. I'll be hoping for is a little pullback here. I mean, obviously to 98 cents would be great. I don't know if that's going to happen though. That would be awesome. I don't know if we're going to get all the way down there, but let's hope. We can hope, right? All right. Let's take a look at the dollar yen. So this dollar yen, we were looking for a move up towards, this 110.25 to get on the short side yesterday. I I, I personally wasn't, but I said, hey, if you want to short it at 110.25, that's the place to do it, right? Because there's the broken trend line, retest the broken trend line. We obviously did it, and we've been bouncing around here. The flip side to this is just like the dollar index, man, if we break out, like if we break this 110.60, this thing is gone. I mean, it's going to launch. That is major resistance at this point. And we're in a range environment, but we are on the verge of turning bullish here on the dollar yen. And you know me, I'm trying to get long the dollar yen. I just wanted to get long down here, somewhere down here versus, you know, before it takes off here. It looks bullish. It looks very bullish to me. And I guess with equities moving higher, it's just helping. But, my skepticism also is with the potential of the equity markets rolling over. If they roll over, what happens? What happens here? I mean, if they roll over, do we push back down again? And it's hard to say because we haven't really seen the equity markets pull back over the last couple of days. You know what I mean? The equity markets have been pretty bullish over the last couple of days, so we haven't seen anything to make us feel that it won't. All right. So anyway, I guess a pull back to 109, 109.10. Well, would be support. Okay. Um, all right, let's take a look at the Canadian. Obviously, we have the BOC today. Now, the Bank of Canada, like I said, I think the risk is the Bank of Canada could be dovish today. Paul thinks there's a risk of a cut. I don't know if they're going to cut at this point. I don't think that they have enough ammunition to do so, but they could, and maybe to assist some of the Alberta wildfires. But I don't think that's a good enough excuse for them to cut. And I don't think the Canadian economy has weakened to a point where they really need that to happen. But the flip side is, how about if they are dovish, or even if they're not that dovish, could we pull back? And I think a pullback is possible. Like I said earlier, I am bullish as long as we stay and hold above 130. I mean, we could today dip below 130, but I think 130 is going to be a place where a lot of people are looking for longs. We have this, shoulder, head, shoulder, which points eventually to 135. All right. Now, we're probably going to end up being mid-range or really close to where we're at right now, because mid-range would be in between, major support and major resistance. And here, I'm just going to remove this for now. Okay. Resistance is obviously at 132, right? Resistance is here at 132. Support is here at 130. We're probably going to be pretty mid-range going into the Bank of Canada. I don't expect us to see a lot of movement right now. Boy, crude's rolling over too. Um, so that, like I said, I think those are our boundaries for today. So support 130 and resistance 132. I would say this is major support down here. It's bullish while we're above 130. 130.30 is the 38% retracement. So I'm going to write down. Well, no, I'm not. I'm just going to keep 130, but just to also understand that 130.30 is the 38% retracement, which that may hold us too, on the way down as well. Also, if you consider this right here, that high was 130.15. Okay, so there's going to be a lot of support, basically from 130.30 all the way down to 130 even. Okay, all right. Let's go into the Kiwi. So the trade balance numbers out of New Zealand came in strong last night, pushed the Kiwi dollar from it really didn't do a whole lot to it. I mean, we pushed up to what we pushed right up to this 67.50. Very choppy environment at this point. I still think we're bearish as long as we stay below this yellow trend line, frankly. But at this point, we could rally up towards 68 cents. Not much of an issue to get back up there. 67 cents is support. 68 cents would be resistance, and all the way up to 68.25. So you just extend that out a little bit. Okay. But 68 cents should be resistance today. 67 cents is major support. And again, I'm going to reiterate, we're bearish while we've come out of this, through that trend line. We're bearish, but it's really below 67 cents. It really opens up the downside. The Kiwi's been very frustrating to trade. I'll be the first one to admit it's extremely frustrating trade at the moment, and I'm not trading it. I would consider being on the short side above 68 cents if we can get it. That's a big if. All right, I'll be back in a few minutes. Don't go anywhere. When I come back, we'll do the Aussie, dollar index, Nordic currencies, peso. Back in a few. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to continue on with our analysis on the Aussie. Let's go ahead and go to the Aussie dollar. And where are we at here? Okay, so we're gonna let's redraw some of this stuff with the Aussie. I think I was kind of playing around with the charts yesterday, and I think we need to kind of redraw everything here in the Aussie dollar. Let's go out to the daily first and foremost. Okay. So here's your daily chart, and we're, if I'm not mistaken, we're in between fibs here. We are. We're sitting below the 618. We've had a really nice move down. The Aussie is like, this momentum has really slowed. I mean, after it's gotten just absolutely killed, and there hasn't been a lot of respite for the Aussie. I mean, it's just the thing's just been getting crushed. Bounces have been small. It's been pretty, pretty aggressive selling, this whole way down. Um, it's kind of hard to say if the Aussie's finally looking like it might base around here. Relative strength has been divergent on the 4 hour on the way down. I just don't, looking at it, like, I don't know where it would turn bullish, you know, after having such an aggressive fall. It's hard to say. Um, like I said, it's really hard to say about this Aussie. I Looking at it, it's fairly unreadable, and it's kind of like the same with the Kiwi. I'm not really trading them. I'm not. It's like the Aussies too. You hear me say this every once in a while. It's too weak to be shorted, or it's too weak to be bought, but it's too oversold, or maybe it's too weak to be bought, too weak too oversold to be shorted at this point. Um, I think you kind of got to look at it maybe just from a horizontal standpoint, knowing that while it's below this 7250, it's bearish, and I bet I don't even know where the next support is really. Um, it's because it's not giving us any, like, we're in between fibs pretty much all the way around, so it's hard to understand why it's kind of stopped where it stopped and give us some sort of concrete backstop to be long against. There just isn't any real reason. I would say that 7250 is resistance, not great resistance, but it is. Okay, and I know it's bearish. Got that much. Um, I guess what we can do is we can mark up support as the lows here at 71.45, which will be 71.50 basically, and we're just kind of in between this 72.50 and 71.50. And like I said, I don't know if there's a whole lot to do here. Okay, let's take a look at the dollar index. Okay, so the dollar index is on, obviously resistance. My trend lines may be off just slightly. Um, I don't, my drawings by no stretch of the mean are perfect. We may be like this, which is, this is basically just a duplicate of this line down here. Okay, which I believe is significant because you have that spike low, which was obviously very, very strong support, um, and so I'm assuming, based on the price action that we saw just over the course of the last 24 hours, that this is now significant resistance, which will be 96 or 95.65. Okay, 95.65. And if you're bearish the dollar, you do not, and I'll repeat, you do not want to see that break. Okay, Because if that breaks, we are going to start screaming higher. I'm going to have to go with the assumption that that everybody is shorting the dollar right now based on what they're seeing here, knowing the euro's near support. Everybody's got to be leaning on the dollar at this point. Okay. And while we're above, we have that breakout point there, but basically while we're above 95 cents, all right, it'll stay bullish. But if we can get below 95 cents, deflate the that'll deflate the dollar. It'll take the wind out of the dollar sails, if you will. Okay. All right. Let's take a look at the peso. So this peso, I'll tell you, the stock market's been really strong, and the peso has been holding up really well, which to me is a little concerning. We actually stopped right where we thought we were going to stop yesterday at 1852. But I'm not trading the peso right now. I did not short it yesterday. I thought about it, pondered it, thought about it, didn't do it. But at this point, key resistance is at this 18. Let's just call it 1860. That's critical now. Okay. And what's great is if you break this low here, then you got a double top in play. So, right. I'm assuming, just again making an assumption here, that a lot of people are trying to short the peso up here. You remember, if you recall comments from me over the last couple of months when we were down here at 1750, I'm like, man, I cannot wait till we get to 1850 to short it. Now that we're up here, I'm a little nervous about doing it because equities look like they can roll over at any time, and so if they do, we will end up going higher. So I'm hesitant about being on the short side of the peso just yet. All right. 1830 to 1860. I think that's our range that we're dealing with. 1830. And by the way, 1830 I would say is major support, because if we break through that, then we have a double top in play. We are bullish still. As much as I'd like to just short it right now, it's just, like I said, I'm a little nervous just yet. All right, let's go to the Norwegian krona. So these Nordic currencies haven't done anything. I'm still long the US dollar Norwegian krona. It's half-size position, just sitting in it. We broke through this trend line here, but there's no follow through. What that tells me is that dips to this neckline are probably going to be bought, and that's significant. Looks like that's significant, but I'd say more significant will be down here at 825. But for now, $830 to $840. Okay. Let's go into the Swedish krona. Swedish krona is sitting on support at 830, but we could obviously we can even pull back a little further. The relative strength is back at neutral. The other thing about this, we may be setting up some sort of flag as well. The other thing is just we're not getting much of a pullback here in the U.S. dollar Swedish krona. I mean, if you're looking to be long and you're looking for dips to be long, it's just it's just not giving you an opportunity to get long. So a dip to 827.50 probably be a good place to be on the long side. Resistance is at 838. So US dollar, Swedish krona, 8.2750 and 8.38. This thing's still bullish. Okay, so there's your bias chart. Your bias chart is complete. All right, and now I'm going to take some questions. First question.